The block. I wouldn't fit with that dress. That's what I'm saying, like sparkly, comfortable ones.
What's up, guys? We're going to give everybody a couple minutes to join, and then we're going to get started here. Okay, we're going to go ahead and get started here. So let's just start with the indexes, right? So main thing that we're looking at, we're hanging out at 3 ATR. As you can see, the last time we got to this area, we had a huge pop, or came back to the mean, came back to 2 ATR up here. Now we flush back down. So I'm kind of wouldn't be surprised to see the same type of activity. We have a lot of people bearish down here, a lot of movement down there. And so obviously daily squeeze fired off. It looked really clean on the 4 hour. I know a lot of you guys were following that. Basically we made our move down below 21, held below, started to downtrend. And then once FOMC came out, the squeeze fired off and we had a huge move downside. And then you can also see that on the 1 hour time frame here as well. You can see we had 1 hour squeeze. Once we had the momentum shift, we had a huge flush to the downside. So at this point, we're pretty extended. We had an inside day on Friday. We tried to, so this will kind of be an easy point of playing like where we might move next. So a break above this, the high day on Thursday, or a break below. I would be more inclined if we had a break below, it'd probably be some sort of liquidity grab. Reason why I'm saying that is because we are at 3 ATR. So we are pretty extended. We're getting extended. I mean, we can have a move down to here and obviously further, but you can see pretty much majority of the time we're going to be respecting these levels here. And you can see last time we came down to this area, almost the exact same spot, we got bought right back up. And so as you can see, we're already starting to move up a little bit in futures. So that's the main thing. So A is that we're down at 3 ATR, right? So we're getting in oversold territory. We have a squeeze working in our favor. So I mean, the market could continue to downside, and I'm expecting that we'll get some action off this 3-day and 2-day squeeze that has been forming here. So we're still within a normal range on the 3-day. 2-day, we're starting to head outside of there down to 2 ATR. But my idea is we could see a decent bounce. I'm not looking for anything significant, but I am expecting some sort of bounce. And like I said, number one reasoning, we're down at 2 ATR, heading towards 3 ATR. And then also, you guys know I like to pay attention to the put call ratio here. So you take a look at the put call, we are up above 1.0. And so let's see if I can show you an easy way to see this, right? Okay, so this is ES, right? Cool. Okay, so let's get these to sync up real quick. Crosshair. Okay, so as you can see, times that we have pushed above 1.0 on the what's it called? On the put call ratio here, you can see here we had a nice push up. We caught this last time that happened when we had a reading above 1.0. We had a big push upside. It doesn't look like it because it's a daily chart, but it was a very significant rally. And then on, was it Thursday here? You can see we had a reading down at 0.6, and you can see what resulted after we had a shoot, our price shoot down. So anytime we get, I have a full class on this and I will continue to teach on it, but when we get extended readings over 1.0, that means too many people in the market are bearish. And then when we get readings down at 0.6, that means too much of the market is bullish. So typically I look for things of the opposite side. And so as you can see right now on let's see, what day is that? Thursday. Yeah, Thursday we had a push above, and we had a 1.07 reading on the put call ratio. And then after that, we had a little bit of a gap down in terms of the put call. And that was because we swept some liquidity here when we had the push up and the gap up in the morning. So there were people getting out of their puts because they were weak hands basically, and they got stopped out of puts there. And now you can see we're back above 1.0. Everybody's bearish again. So we'll see what happens. I'm not looking for a huge bounce. I'm just looking for some sort of short covering. And this can always tell us what's going on, right? Like, as you can see, when we had the reading at 6.0 here, when we opened up in the morning, we tanked down the next few days. We had a reading above 1.0. We had a nice push upside from about, let's see, from the close, a 1% move. So that's, in terms of options, that's a huge move, right? So those are things you want to pay attention to. When we have these readings, you can see, like, here we go. Here we had readings above 1.0 all in this area, and notice that was the low here, right? And then once we got there, we had to push back up. And then let's see this reading here. Okay, another reading. We're over 1.0, and notice that was the low. We had a huge gap up and then had to move up after that. So I like to pay attention to this, and it keeps me in check of my bias. Typically, the best things to see are when I see the put call ratio like in my favor of a trade that I want to take, and then the chart's lining up with it as well. This tool is useless if the chart isn't lining up for what you want to take. So yeah, this is what I'm paying attention to. So right now, I gave a kind of a quick rundown of how that works. But right now, I'm looking at the fact that we are above 1.0 again. So I don't necessarily want to get short here. This isn't the place to get short. You are kind of shorting in the hole, basically. You are shorting. We're not going to, the likelihood of us going down much further from this direct point here and not retracing is not very strong. So it's not a place that I would prefer to go short. And so that's the main reason for it, right? Okay, but I still do remain bearish because we have, well, the squeezes have now fired off and now kind of extended. So the weekly squeeze firing off here, we're kind of breaking out of this downtrend that we formed on the weekly time frame. So we'll see if this can hold up. I would kind of expect something like this for the dollar, and this is the dollar index. So you kind of want to pay attention to the main top things you want to pay attention to in terms of like quote unquote market internals, or you want to pay attention to the VIX, the dollar, bonds a little bit. They're not as extensive. I think the correlation isn't that as much as the dollar, and then the put call ratio. So the dollar squeeze is fired off. It's been forming since back in March of this year, and we've been consolidating, and now we finally got a breakout. So I'm definitely paying attention to that, right? And so now what we have to do is we kind of we go to lower time frames to get a better idea. And you can see we've been basically bouncing in between 2 ATR and 1 ATR back and forth. At some point, we're going to come revisit the mean and come back to this yellow dotted line here, which is the 21 EMA. And that will relieve some pressure for the markets. Whenever the dollar is pushing up, it puts a lot of pressure on the markets to go up, because if the dollar is worth more, that makes stocks more expensive, if that makes sense. So I have a full video on that. We got that in the recordings if you want to check that out. But so when the dollar is moving up, it puts pressure on the rest of the markets. So that's something we have to pay attention to. Now, we've been pushing this 1 ATR, 2 ATR for a while. We had a little bit of pullback here, but I'm kind of looking for a actual retest of the mean here. Something that can kind of signify that for us is once we see on the squeeze that we're starting to lose some momentum here. When we get 2 bars of dark blue momentum, that will kind of give us the indication, okay, we might be losing momentum on this, and we're going to start to chop sideways. And once we start to chop sideways, then that will give us some easing pressure in the markets. So that's one thing to pay attention to. So with looking at those two type of things, with an expectation that the dollar should revert back to the mean at some point soon, and then the put call ratio over 1, I'm not saying I'm looking for us to rip upside. I'm saying I kind of expect us possibly to move back to here, maybe try and fill this gap, see about filling the gap. We could, and there's probably 3 scenarios that can happen, right? We can come to, a lot of the times, these levels where the gaps are created, every retail trader and their mom love to get into gap plays, right? They love to fill the gap. Most gaps do get filled, so that's why they love to play it. But at the same time, a lot of times market makers like to play levels off of the gaps. So a lot of times it'll come up to that gap and then reject it, or it's come into this gap, especially if it's weak, when it tries to try and fill the gap and then fails in the middle of the gap. That can happen for sure. So that's one scenario that I'm looking for. So like if we're looking for a bounce scenario, what I'm kind of looking for is like, you would maybe take a day trade, look for a day trade up into this gap level, and we can kind of reject there. And then another scenario would be we do nothing because there's no real news coming out this week, and we just chop sideways until the mean comes and meets us here. That's probably the least likely scenario, right? And then from there, we could have a straight up gap fill and then reject. But the most likely scenario, we'll probably get a pop back to the mean 21 EMA. It will probably, by the time it happens, it'll end up coming somewhere down in this area around 440. And that would probably be a very likely spot that we would end up rejecting. So we would have something like this, and then our move down. And then we would kind of just continue to play the trend as so, right? Like we would continue to look for, as long as we are creating this downtrend of lower highs and lower lows, because we always want to pay attention to the structure, we're still creating this lower highs and lower lows. So it wouldn't be off to think that we continue to do this. And then if you really look at this pattern, okay, when you draw this out and it's kind of symmetrical, what is it kind of looking like now? Could it be forming some sort of bull flag? I don't think we're going to straight up die. I mean, everyone sees this head and shoulders. So it might be a little tricky to play, but at the same time, this is probably, if we're keeping our idea symmetrical of what the market is going to do, it's probably going to continue to create some sort of pattern like this. Now, that's a longer term view. And if we look at the weekly time frame, it kind of plays into the same idea, right? So all we're doing is we just broke past the 21 EMA. We might come down and test the lower Keltner channel, but right now we're just trading sideways. And that's evident. Why? Because we had a squeeze. That's what gave us this huge move right here. a release of energy, push to the upside, gave us a move from somewhere around 409 to ultimately 460 weekly squeeze. Those are the times when you want to put your money up and really dial in and put a lot of money towards these directional trades. When the indexes have a weekly squeeze, it's getting ready to fire off one way or the other, and then you play it as so, like this here, weekly squeeze. We had a flush to the downside that was pretty huge, right? I mean, we went from 455 area down to almost 100 point or $100 drop on SPY, which is a huge move, right? It's almost 25%, give or take. So that's what we got to pay attention to. Now, what we have to do now, and I put in my newsletter, is kind of like when we are in these moments in time so this is turning more into a teaching than watch list, but when we have these weekly squeezes, that's when you put your money in up and you start looking at like Nvidia, you start looking at Google, Apple, Microsoft, these other names that could potentially lead the market and have a really strong directional move. And that's when you start loading calls into those positions for a swing. And then when we have moments in time when the squeeze fires off and we lose momentum, notice how first bar of losing momentum here, notice how price action's been kind of crap, right? Like we lost 1 bar of momentum, and then 2 bars is kind of our confirmation. And then now ever since then, we've just been kind of chopping, and it's kind of been some crap like to trade. This is really easy to trade. This is easy to trade, right? And then once we get up to here, now it's kind of chop mode. And now this is where we focus more on day trades and stuff like that. Now, when we look here at the daily time frame, so with the weekly time frame looking like that, you got to kind of channel your energy towards the right things. So here is when you want to get long in swing trade, right? And then when we get to this phase, this isn't as much you want to hold swings for 2 weeks, 3 weeks, 4 weeks at a time. This is more the time when you want to start trading the lower time frames, like the daily squeezes, things like that. And I mean, this move here, if you bought puts at any point, obviously you're going to make money. It continued down, right? And then, so this is easy to make money on, right? We just flush lower. We're going straight down. Anybody that sees the market going down, they can just buy puts and there hasn't been a pullback and everybody can make money, right? Now, the difficult part is when we have periods of time when we are in here, especially here. This area here, when we're chopping around, not doing much, and then we finally make a directional move. Chopping around, not doing much, finally make a directional move. Chopping around, not doing much, finally make a directional move. So that's what we're looking for. Those are the things we want to pay attention to and see if we basically all you're doing is when you're calling it multi-time frame analysis, you're looking at, okay, weekly time frame, choppy mess. So we need to go to the lower time frame and focus on those lower ones. Okay. And then when you look here, choppy mess. Okay, we're getting ready for a directional move on this time frame, right? So we're in a chop, directional move, chop, directional move, chop, directional move. Same thing here. It does it on every time frame. And that's what you use the squeeze for. Chop, directional move. Chop, wider range though. Directional move. Chop, directional move. It does it on all different time frames. So when you see it happening on this time frame, on the daily, that's when you know you can get ready to get into a position. You got to squeeze, you got everything forming that you need. Boom, you catch the flush down. Same thing here, catch the flush down. And then when it's when you're sitting in those moments waiting for the overall theme or the overall market to do its thing, like have flushes like these on the daily time frame, flushes like these on the daily time frame, you go to your lower time frames, like the 2 hour. We were able to catch this gap up move and run up. And then when you look at the 4 hour time frame, it was telling us to take this move. So we got in and we took this move. And so you just continue to trade whatever time frame is giving you a setup. So that's why you can't I don't believe in oh, I'm a swing trader, I'm a day trader. You got to play based on the perspective of whatever time frame, what it's giving you. So with that being said, now the directional move has happened with the daily time frame. Now, where are we going to be living? Probably on these lower time frames, the 1 hour, the 2 hour, maybe the 4 hour, and probably the 30-minute too. So let's take a look at this. 30-minute has a squeeze. Now, when we're looking at this is a setup to go short, but at the same time, like, we're down at -2 ATR. So maybe it would be smart to just wait to see if we can get a bounce, get a new squeeze, and then take a short again. So we don't want to shorten the hole, like I said. So right now I'm looking for that dead cat bounce based on the put call ratio, wipe out some shorts because everybody and their mom is short right now. And anybody that's shorting here, they're shorting in the hole. They're shorting at potentially the lowest place we can go. We don't go much further than 2 or 3 ATR a majority of the time, as you can see. Look, here, 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 here. Pretty much every time we get to that -2 ATR or -3 ATR, we pop back up. Too many people get short. And the put call ratio is complementing that idea as well. So right now, my main idea is I want to look to day trade the upside. And it's probably not going to be a long-lived upside, but we could potentially take it into the first gap level and then a gap level up here. So that's what I'm going to be looking for in terms of going into this week. It's going to be day trading, mainly day trading, because the directional swing move has already happened. So now we have to wait for the next directional swing move to happen. And then from there, we just day trade until we get that. But these times here, these are the times when you want to put your real money up and put more money into your trades. And this is the easy trading. All you got to do is buckle up and hold on. And then daily time frame would come second, right? These are the ones where you kind of buckle up and hold on, but they're not always as easy. Like this here, this move here, and then this move here. So now look at it from this perspective. We had a squeeze here. We had a directional move down. Okay. So we had a squeeze here, directional move down. Okay, we had a squeeze here, directional move down. What's probably going to happen again? A move back to the mean, a squeeze, and then a directional move down. Or back to the mean, we change structure, directional move back to the upside. We've got a couple gaps to fill on the upside, but we also have gaps to fill on the downside. So, but now I'm just trying to give you an idea, okay, how should we be playing this stuff? Right now, you got to understand the time frames. So now we're looking at, okay, what are the lower time frames doing? So as of tomorrow, we've sold off hard. We are down at -3 ATR here, -3 ATR on the 2 hour, 4 hour outside of 2 ATR. So no, I do not want to short it here. What I'm going to do is I'm going to wait and see if we can get a long trade to the upside, or just wait for the upside move, wait for a squeeze to set up and take it short again. So that's what I'm looking at for the indexes. And then when it comes for everything else, it's pretty much going to be the exact same. So we can go look at other stocks here. And if you guys want me to look at certain stocks, just put it in the chat and I'll cover those. Just drop those in the chat and I'll look at them. Apple, probably another opportunity to go short here, right? So this could be an inverse head and shoulders. Who knows? But as of right now, we just got to follow what the markets do. And if we get a short setup in the markets, we can go short Apple as long as the setup looks good. But right now, we've got an A+ setup here. We've got stacked EMAs, we've got a squeeze, histogram's looking okay. We're just waiting for a trigger. And whenever we get below this level here and hold below this level here, a lot of the times we're probably going to go test this 167 area. But I would like to see the put call ratio more in my favor before I start loading into short positions. Microsoft. We got the negative stacked EMAs. We're down at 2 ATR. I'd like to see a little pullback here. And this would probably be a really easy short. Right? Because you can see we're trying to create that trend of lower highs and lower lows here. Now, one thing I want to pay attention to is we've got a weekly squeeze here. Now we want to pay attention to, okay, what does this end up doing? I'll be going over Tesla. Google needs to pull back to the mean, so I wouldn't be surprised if we see Google pull back to this 125 area. That'd be a pretty easy move. Amazon. Now notice everybody thought, oh, Amazon's falling apart. No, it just made 52-week highs last week or the week before, and now we are back at the 21 EMA and we're entering a squeeze. So now notice this. We look at Apple, weekly squeeze, Microsoft, weekly squeeze, Google, weekly squeeze, Amazon, weekly squeeze. Let's see what NVIDIA is doing. Nothing for NVIDIA. Nothing for Meta. So these major names, top names here, are all setting up in a weekly squeeze. So more than likely, we're probably going to see some chop for the next few weeks, probably 2 months, right? 2 months of pretty boring action of mainly day trading until we get a signal to go long or short and take these weekly squeezes one direction or the other. Now, these major names are forming squeezes, but the indexes have yet to do that. So now we got to wait for the indexes to do that as well. So this is kind of going to be a day trading market for the next however long, right? Okay. So, and then somebody said Tesla. Okay. So Tesla. Let's clear this off. Okay. So Tesla forming a daily squeeze, stacked EMAs. So let's look at it this way. So Tesla. I mean, it looks bearish based on this candle. There's earnings. Oh, earnings are actually coming up pretty soon. Next month. So Tesla, I mean, it looks like it might continue to head lower, but at the same time, we might just see some chop, right? See the 2-day still looks like it's ready for a short, but I wouldn't just jump in front of this because I don't think it's ready. And daily is forming a squeeze. So ideally, this one is kind of a sit and wait mode. I'd wait for the EMAs to cross negative to kind of confirm that we're in a downtrend or trying to start a new downtrend. And then look for this weekly squeeze or this daily squeeze to kind of fully play itself out. And then you could look to go short. So what I would do is I'd probably wait for 4 or 5 more days and then kind of get your idea of where you want to go with this one in terms of a swing trade basis. I would wait a few more days and wait to see what this one ends up wanting to do. So that's what I would do for that one. We can check out the lower time frames. Yeah, same thing with this one. You'd kind of just want to day trade it until you get the opportunity of seeing what it's going to end up doing. It might have a push down to 2 ATR right here around 235. But besides that, I need to see more price action before I can make a decision on this. So basically, I'd wait 4 or 5 more days. If the histogram here is still showing that we want to go short and showing red bars like here, then I would look to go short and see something like this. But if it still holds up and these shift light blue, EMAs are stacked, I'd look for this one to take out 280 again. And then let's see. Coin. Yeah, sorry, that one's kind of boring. There's nothing really to do on that one. You kind of just wait and see, right? There's nothing to do on that one. Coin. Somebody was DMing me about this one and asking me if it looked good for a short, and I said yes, and they decided to take entry here last week. And so they entered here, went short. I think it was based on the 4 hour. They went short on that day. Took majority profits here. I don't know if they're holding on to runners, but I mean, this one looks good. Like it's going to continue short. Like I think it's going to continue flushing. Probably let's do a little bit of analysis here. So I think this level looks good here for it to head back down to this 66.43 area. I've been working on my fib game a little bit for picking profit targets. Yeah, it kind of lines up with that same area. So I'd look for around 66.43 for it to bounce right around there. But it does look good for it looks like it's gonna head lower. Marvel. Let me know if you guys have other tickers too. Okay, yeah, you brought this one up a few times. This one still looks like a really good short. Like I think this one looks like a great short. Easy play. You've got a gap to fill here. Like this, in my opinion, is an A+ setup. You got the EMA stacked, you've got the histogram pushing lower with red bars. Like this one is ready to go. Like I think this one is ready to flush. That's my opinion. I really like that one, actually. So yeah, this one's ready to go. I would want to see it, try to get it closer to the EMAs within this kind of cloud area, somewhere closer to that 50, 54, 55 area to go short. But this name looks really good. Like I think it will flush down to 50. And then it's got another, if it can get through 50, which I'm thinking it probably will. I think we could go fill this gap down here towards 46. So yeah, that one looks really good. You guys got other tickers you want me to check out, or are you guys good? Any other ones you want me to go over? Like I said, mainly I'm going to be focusing on the indexes. Disney. Yeah, this is a pretty clean short. I like that it's near the 52-week lows, and you can see clear downtrend. Like even if you didn't have the EMAs on here, clean downtrend. This one looks really good for a short. Only thing I would say is that I would like to see is histogram color to turn red, but it's already turned dark blue, losing bullish momentum. So I think this is a clean short back into the 52-week low right around here. Roblox. Nothing to do with this one. Same thing as the indexes here for this one, kind of shorting in the hole and a pretty serious demand zone. I mean, look at the last time we got here, the move it had after. I don't know. This is a pretty tough demand zone here to want to, like, I wouldn't go long here because we're in a clear downtrend, but I also wouldn't go short here because we're testing this. Now, here's one little tip for you. When we test resistance, I would start looking for that kind of third time for us to break. So this is 1, 2, 3. Now this is the fourth time. I would look for this one to kind of break, honestly. Ford. But yeah, I wouldn't trade that one, honestly. It's just the risk to reward isn't there. Ford, let's see. This one's going to kind of be wacky with news, but same thing. We're at a demand zone. Like this could turn into a retest of like this falling wedge pattern and just send back up, depending on the market, what the market does. Oh, sorry, I skipped Baba. I think this one, I think this one could be a good short back into this trend line here. That would look like a good short to about 1150 or so, back to this area of support right here, like 1173. So yeah, Ford, that one I like could go short. It's not as clean as like Marvel, like somebody brought up earlier, but I mean the setup is still somewhat there. Okay. Baba. I don't have an opinion on this one. There's nothing really. It's just choppy. Like I thought it was an inverse head and shoulders. It still might be, but It's just like, do you want to trade something like this? Where it looks like this? Not really, not in my opinion. I'd like to see it break out of this consolidation and kind of start a trend before I'd trade this one. Until wait. Intel, this one? Yeah, you could go short on this one. I don't really know what the news was about, but this one looks pretty good for a short back to the low 52-week low here around 19, but you're going to have a strong support right around 20. But if it breaks that 20 support, look for the 52-week low, and then probably 1665. That'd be pretty easy. Airbnb. I haven't looked at this chart in a minute. I mean, we're clearly starting an uptrend, right? So like, see how this chop looks similar to Baba? Like how this chop like this looks similar to Airbnb. What were you talking about, Intel or INTL? Because INTL is a ticker. But Baba, or sorry, Airbnb, there's nothing really here. There's no real setup, in my opinion. Yeah, there's no squeeze. There's nothing. Yeah, there's nothing really to do here. I mean, you could look for it to catch a bid right around the 21 EMA and continue this uptrend, but I don't like how it's creating a lower high right here. So I don't love that about it. So really, I wouldn't do anything with this one at the moment. BA. This one. So okay, so this one, it looks like it's going to fire short, right? And head lower. So what I would do in this situation, because the EMAs are still cross or stacked positive, I would just, oh wait, this is the date, weekly, sorry. I mean, if you wanted to play the weekly, you could, because that's really the only setup on here. I would just wait for it to fire and then, or just size for 0 and see if this thing just falls over, but see we're at support here. So I would be cautious of that. Yeah. So like in situations like these, it's easier to just wait for it to fire off. And then once it fires off, you can take, like, the squeeze fires off, you can take the trade. Or wait for, at the very least, wait for a red bar on the squeeze histogram, and then you can take that one short. But this is a prime example of when I was teaching you guys like the orange dot squeeze, how it'll fake out one way and then just turn around and completely change trend. That's a prime example of that right there. But all right, guys, thank you guys for coming. If you have other tickers you want me to look at, just DM me in the chat. I will take a look at those. If you have other questions, let me know. If you're not a part of the Signals chat, head over there. We've got a 7-day free trial, and we have a bunch of in-depth teachings of our strategies and stuff like that, and our alerts and stuff. But yeah, if you guys have questions, just DM me or message me in the trade floor, and I'll get back to you as soon as I can. All right, guys. Thank you. Have a good night. I will see you for the markets tomorrow.